today's video, I'm going to teach you the best trading strategy to grow small accounts. I've used this exact strategy to turn accounts from $500 into $8,000, from $500 to $13,000, and I've done $1,000 to $5,000 many times. And we're gonna start off with the concept. The first thing you need to understand is basic market structure. So the market goes in trends. It goes up, making higher lows and higher highs, or it can go down, making lower lows and lower highs. This is typical market structure, and what you're looking for here is the zone for trades. So these zones end up being extremely useful for us because this is where we're going to take our trades from. Specifically, we're going to be looking at the higher time frame trend. Right here on the left side is what the higher time frame would look like, and here on the right side, this is how the smaller time frame is going to look like. So what this means is that we need to look for pullbacks and confirmations on the smaller time frames in alignment with the higher time frame and looking for an engulfing candlestick. So let's say we're right here in price. Exactly what you want to be looking for is an engulfing candlestick right here to the upside that's going to show you price is most likely going to continue to go up with the bullish trend. However, on the 1 hour time frame, you're going to see price coming down, and you can't allow that to affect your decision making. You have to understand that that's part of the plan, because on the 4 hour, which is what we see here to the left, price is still heading upwards. The only difference is we're seeing more detail, so it's going to seem like we have a bearish trend, but in reality, it's just a pullback on the higher time frames. That's the first concept that we need to understand, but now we need to go over how to select the best zones in the market, because there's a lot of zones, and if you mark up all of them, your chart is going to look like this, and then you're not going to know where the market could reject off of, and everything is going to look like a possible trade. That's what you want to try to avoid, because the market only makes a handful of good trades, and you only want to mark the zones that truly matter. The first thing that we're going to do this is to only mark zones on the 4 hour time frame. This is the time frame we're going to use for the trend, the direction, and most importantly, our zones. So the 4 hour time frame is how we find areas like these where price is most likely to reject off of, and this is where we can look for our trades. So the way we analyze the markets with this exact strategy is we start off on the weekly, we go to the daily, and then the 4 hour. Our bias is going to come from these three main time frames. So let's say the weekly is bullish, the daily is also bullish, and the 4 hour is bullish. We're only going to look for buys, and that means that this is an exact trade that we can take. If one of these time frames is not in alignment with our trend, then we're not going to trade it. Because when you're flipping a small account into a big account, every trade matters. Every trade matters, because if you lose one singular trade when you're trying to flip an account, it can mess up the rhythm and the momentum of everything. So every single time that I've managed to flip an account successfully, from 500 to 8,000 to 13,000, from 1,000 to 5,000, 1,000 to 8,000, it's always started off with a win. You need to win that first trade. I cannot stress enough how important it is for you to understand that if you don't win the first trade, there is a very high probability that you're not going to be able to flip that account. I would go as far to even say, if you lose that first trade, start over again, because it's not going to be the same. I've tried it so many times. Every one of my flips starts off with a win, because that sets the tone for the rest of it. So you need to take your time, even if it takes an entire week to find the first trade, it's extremely important that you win the first trade. Now, the risk management that we're going to use to flip accounts is going to be 25% per trade. It allows us to still have a loss or two and still stay in the game. If you lose 3 or more trades, then you're out of the game and you have to start over again. That's the nature of flipping accounts. It's going to happen. However, 25% I've found is the sweet spot. So you can risk a lot of your account and grow accounts very fast, but you still have that safety net. So of course it depends. If you're starting off with a very small amount, maybe it'll be more than 25%. And usually at the beginning for me, it'll start off closer to like 40 or 50%. But once I've won at least 3 to 4 trades in a row, then I lower it down to 25 or even 20% per trade. This allows you to multiply accounts very fast. And I'm actually going to go on the charts very soon and show you exact trades that I've taken and the risk to reward of these trades, because that's where the true magic is. Let's say you start off with $400 starting balance and you're risking 25% per trade. So let's just put her right here. If you catch a 1 to 3 risk reward ratio, you just made $300. So now your new balance is $700. And that's just after the first trade. So let's say you only took your first trade, now you're up to 700. So almost 1,000. Now, when you go to do this again and you risk 25% of the account, which is approximately $175, now if you win that trade, you win 175 times 3. You're basically making the same amount as your original balance just on the second trade. So that's just 2 trades in a row winning. So that means you would make 525 on your second trade, which now brings your balance to $1,200. So it's very, very exponential the way that flipping accounts works. And once you start to build that momentum, you're good. Let's say you reach 1.2K in your account and you just lose 1 trade. It's normal that at some point you're going to lose a trade with the strategy, as good as it is. All right, so that means you would lose $306. So I just calculated it right now. That means your total balance would still be 918. So this is a fairly conservative estimation here. After just 3 trades, you would already be at $918 if you win 3 and you lose 1. That's around the 75% win rate. Of course, long term, your win rate may drop down to 60 to 70%, but you're still looking at amazing results because of the law of compound interest and the law of exponential gains the more that you win, especially if you win those first couple of trades. So now let's get into the actual strategy that I've used. All right, so this trade right here is on NZD/USD. The first thing we want to do is I'm going to circle this area right here so we can go into the higher time frame. We start off on the weekly time frame. So the market was extremely bearish, so we have a clear trend to the downside, as you can see right here. So as you see, the market is going down. Price is well below the weekly moving average. So then when we go into the daily time frame, it's very obvious that the daily time frame is also going to be bearish. So now we've established the trend for the weekly and the daily. Of course, as we go into the 4-hour time frame, chances are the market's also going to be bearish. So now what we see here is that price actually formed a head and shoulders. Now this is a price pattern that's extremely useful for us to trade with. I would even recommend you to look for it, especially when you're looking to flip an account, because of the high probability of this setup working out. So here we have the left shoulder, the head, and the right shoulder. So I'm sure you can see exactly why it looks like a head and shoulders, because price made an area up here where it can be used as resistance. So now that we're going to remove the head and shoulders, we're going to be seeing more clearly exactly what zone price bounced off of. So it's important to remember that we're on the 4-hour time frame because that's the time frame we're going to use to mark our zones. Price reached up into that area and then started to head down. So now we need to go into the smaller time frames, our entry time frame, which is the 1-hour time frame, to see this trade in more detail. So the reason why we entered this trade is because we had strong candles coming down. In this case, it was not engulfing candles. However, I do believe that I actually entered in a little bit later. So I think I entered it right here on this blue candle after we had an engulfing candlestick. Regardless, price did reject off of that zone, and that's what's important to understand. The ideal time to enter a trade is after you get an engulfing candlestick and a slight pullback, because you get the best risk reward since you're entering close to the zone. You want to enter in off of these zones. Now this right here that I have marked is a minor zone, which is not as important as that major zone on the 4-hour, which we tapped into. A good trick is that you can mark your zones based off the time frame. So I know, for example, my green zones are my most important zones because those are support and resistances that are found on the 4-hour time frame. From there, you look for your target. You want to look left, and in this case, I got out right here around this price. And I'm going to see if I can actually pop up the trade right here on the screen so you can see the trade, when I entered, when I exited. This is all documented live. I show it on my Instagram and on my Instagram story as well. So this is a prime example of the type of trades you want to be looking for to flip accounts. This is the exact way that I've flipped accounts many times. Let's go ahead and talk about probably the most important part about all of this. You're never going to flip accounts efficiently or correctly if you do not have the right mindset behind it. You need to understand that flipping accounts is somewhat of a gamble, and even if you have a very good strategy, you can still lose a trade. It's perfectly normal. However, when you implement all of these things like the risk management and the actual trading strategy that I've taught you in this video, it's going to increase your chances of doing it. But if you don't get it on the first try, don't give up. That's what happened to me. When I first tried to turn a $200 account into a large amount, or at least a medium-sized account, I was unable to. I just got unlucky. I had a couple of losses, and that's it. All momentum was gone. And once the momentum is gone, you can't really make profits. You can't catch up to where you were mentally when you first started trading. So your mental state is even more important when you're flipping accounts than when you're just regularly trading, because it's extremely difficult. So the psychology part of flipping accounts is, one, understanding that it's somewhat of a gamble and you're not always going to be able to do it. Even if you're the best trader, you won't flip the account every single time. You could do it maybe every twice or every 3 times, but not every single time, because flipping accounts is inherently risky because of the high risk that you have to take. So as you start to understand probabilities better, you get confident and you stay confident in yourself. That's the most important part, that you stay confident in your trading strategy while you're trying to flip accounts. So now that you've watched this video, I highly recommend you to watch this next video that I have right here, because it's going to combine with the concepts that I've talked about in this strategy and overall just give you a better understanding so you have a higher chance of flipping accounts correctly. So I'll see you in that video.